Okay, hi everyone. Thanks for joining me today on this live trading room, November 8th, 2021. And before I start, as always, a quick disclaimer about today's session. So obviously it's for educational purposes only. I'm not giving any trading recommendations or any buy or sell signals. It's only for education. And of course, any trades you take during or after the session are at your own discretion. If you have any questions, please always feel free to write them down in the chat box. You can send them to hosts or hosts and panelists if you want everyone else to see your question. Before I go and speak about the charts, the weekly, the daily charts, and review key levels, let's just quickly see what we have this week in the economic calendar. Key events. So today, this is, by the way, GMT time. Okay, so for Europe, just add 1 more hour. For US, reduce or take down, I think, 5 hours for Eastern time. So Fed Powell will speak today, Fed Chair Powell, and also the Governor of the Bank of England, Bailey. Tomorrow for Euro, especially, we have, of course, the important, one of the most important events of the German CEV economic sentiment. We have Lagarde speaking tomorrow for the ECB. From the US, we have also the producer price index and some sort of a speech, not something, I'm not sure exactly what the importance is tomorrow, but for Wednesday, we have the core CPI, the inflation, the consumer price index, and the initial jobless claims. So these events for sure will have impact on the market. 2:30 European time and Central Europe time, and 8:30 New York time or East Coast US time. For those of you who are trading the Canadian dollar, or if you have on other brokers or whatever, any crude futures trades, there are also the crude oil inventories. Thursday, we have for Australia the employment change, we have the industrial production in China, and we have some GDP and manufacturing production data from the UK. And on Friday, JOLTS job opening. So I think Wednesday, as always, with the initial jobless claims and the core CPI, definitely are, I think, the most important events of the week, especially for the dollar. And of course, for the euro, the German economic sentiment, and maybe Lagarde will say some things as well. So that's for economic events. Pay attention if you're in short-term trades. So let's just quickly review the dollar index. Just let me know, can you see the chart of the dollar index before I start talking about various pairs? Let me know. Yeah, okay, thanks. So, excuse me, dollar index, in the last few months, it found nice support around this demand zone, as you can see, and above this line of 88.50 or so, which was previously resistance and then support. This support formed a demand zone, and when it came back down to this demand zone, it went up and actually had a double bottom here. This double bottom confirmed, and now it's sitting right on top of this double bottom, sort of like neckline or middle line, as you can see here, and the trend is overall bullish. So dollar index overall is bullish, but last month there was the spinning top hesitation candle. It doesn't mean it's necessarily going to turn around. Could be some sideways movement, and we could see, you know, on various pairs, some sideways movements with the euro maybe, or pound and other, or dollar, dollar yen, dollar Swiss, whatever. But overall, the trend for the dollar is up, which means against most currencies, the dollar is gaining strength. And if it crosses above 95 around here, okay, let me just pull it up. If it crosses the area of 94.60 or 95, it can start moving even higher with more um, momentum and more strength. So this is definitely a key zone around 94.50, 95. Pay attention. It's imminent. It could happen in the next few days, especially now that, well, allegedly the Fed has said that it's tapering its QE or asset purchases. So that's for the dollar index. Overall, maybe, you know, it could start moving higher, but if you see these moving averages, it's stuck right in between the moving averages. Last month was sort of a like a reversal candle, and it can definitely reverse and turn around and start falling back. You know, with all the money printing and the U.S. debt, the long-term forecast for the dollar could be bearish, but it's really interesting to see how it will or which direction it will choose. As I said, it's right in it's right below a strong resistance line and in between these moving averages. So interesting on the monthly chart to see which direction it's choosing and whether this monthly candle from October is indeed a reversal candle or just, you know, or just a you know, a sort of a waiting candle or hesitation to see to which direction the market is going. So a quick view on the heat map. You can see it on you can always go to the heat map on TradingView and watch the strong currencies at the moment. The leading currency or leading the leading currency is the New Zealand dollar, the Kiwi, across the board against all currencies. So all other currencies are losing momentum or losing strength against the Kiwi. Other strong or relatively strong currencies are the Australian dollar, which is weaker maybe only against the Kiwi. And the weakest currency at the moment is the Swiss franc. Probably, and we'll see it, we'll watch it on the chart. One of the reasons is because it's reaching a demand zone on the Euro Swiss, and I think maybe many other participants or traders are expecting or are afraid of Swiss National Bank intervention in case Swiss franc continues gaining strength against the euro and other pairs. So maybe now they're starting to sell Swiss franc, and in that case, obviously, since the Kiwi is the strongest and the Swiss is the weakest, then the Kiwi Swiss presents a great opportunity to go long. And of course, other pairs as well against the Kiwi show good opportunities to go long, like Kiwi dollar, Kiwi Aussie, or well, Aussie Kiwi to the downside, etc. So we'll go over it in the charts right now. So I'll just share the MetaTrader platform. Let me just stop sharing for a sec and share the The chart. Sorry, one moment. Where is it? Okay. All right. So, hi. Well, bird's eye view on various currency pairs, and we'll start with euro dollar. Obviously, on the weekly chart, the momentum is definitely bearish. I spoke about it I think last week or in the last few weeks, how it closed below. Just make sure you can see my mouse. Okay, so euro dollar broke below this the previous lows of last year, and actually retested the recent low on the weekly chart, and seems like again the overall momentum is bearish, and any pullback to the upside could give you some well an area of relatively low risk to enter short. You can see here the this level where previous low was. I mean, it's not an accurate level, but it could also serve again as resistance. What I want to see, what I would like to see is a break below this previous low or these previous lows, just to make sure it's not a double bottom. The momentum at the moment doesn't look like it's a double bottom, but it could always turn around. Even though yesterday's, or actually last week's candle on Friday was sort of a pin bar, you can see that today's candle is not showing strength. And many times when I look at the chart, I'm not only looking at what the charts are showing, I'm also looking at what the charts are not showing. If there is, for example, a reversal candle, and a reversal doesn't come after the reversal candle, it could actually tell me that a continuation is about to happen rather than a reversal. And of course, if here we have a reversal candle or potentially reversal candle, and this candle, today's candle, maybe tomorrow's candle, are not giving me a strong upward or a strong bullish candle showing that the buyers are coming in, it could hint further decline on the euro dollar and a continuation to the downside. And of course, the long-term trend is suggesting just that. I mentioned that on in the previous weeks that the the breaking of breaking below the previous lows can lead or take the euro dollar all the way down to previous either support lines or demand zones. At the moment, you know, the momentum is bearish, and also on the weekly chart, we had this hesitation candle after this bearish candle. If this week doesn't close with a convincing bullish candle of any sort, it again can suggest further decline for the euro against the dollar. Pound dollar is very interesting. This sort of neckline, it's not a real head and shoulders, obviously, and I'll explain why in a minute, but this sort of a neckline continues holding the pound dollar, well, sort of, because it's a declining line, and therefore it cannot be a neckline, because a neckline for head and shoulders has to be either horizontal or inclining. Because it's declining, pound dollar can continue going down, but at the moment it's going down relatively mildly, sort of sideways and down, just because it's still holding above this this line. And you can see it also very nicely on the daily chart. So again, we have a reversal candle here, and unlike euro dollar, where the reversal candle didn't provide much of a momentum to the upwards, here we see a better or more strength from the pound dollar, but overall the trend is bearish as well. it could find resistance. If it continues going up, it could definitely find resistance either around previous low here, or even higher around here, where it broke this candle, this engulfing bullish engulfing candle. It broke very strongly below it, so it could find more resistance around here and the moving averages. But again, if you're trading pound, dollar, or any pound pairs, just be careful, because it, as you can see, it's going up and down very, very aggressively, and turns around without any warning. Okay, one day going up very strongly, one day going down very strongly. But the sentiment, I think, for pound dollar is still more bearish than bullish. And if this line breaks, we can definitely, the pound dollar can definitely go down all the way to this demand zone on the long term. It's not a matter of days, it's weeks, it's a matter of weeks or months. Of course, if it turns around, um, and breaks above previous highs, then the story is completely different. But on the long-term view, remember, it's coming from a very strong supply zone. Just one more thing, pay attention. Well, again, it's definitely not something that is set in stone, but these moving averages, after, on the weekly chart, after a very strong bullish momentum or bullish trend, these moving averages are now starting to turn around. The short moving average, in this case the 9 EMA, is about to cross below the 50 EMA, sort of a bearish cross. And pound dollar, if it goes even higher than I mentioned before, it could find more resistance around this this encounter or cross of the moving averages around 136.50 or so. So again, for now, overall bearish momentum, but with potential bullish movements as long as it stays above this line, and maybe retesting previous lows or previous breakout points. Dollar yen, very interesting. I mean, it broke a little bit above the supply zone, but it's giving us some bearish signals with these two bearish candles, sort of like a dark cloud cover, or you name it, whatever. But now this week started with a bearish momentum, started with a gap down, sort of tested the bottom of this supply zone, tested the short moving average, the 9 EMA, and now starting to move down, breaking below previous lows. So should it close below these previous lows, it can definitely continue pushing yen pairs to the downside, or at least the dollar yen to the downside, all the way maybe to retest previous high, either this line or this line, or this 50 EMA. So again, it doesn't necessarily mean that all the yen pairs will go down, because other currencies could go up, but the dollar yen at the moment looks like it's providing us with good short opportunities, going below this support line. All right. Dollar Swiss, very quickly, like as always, it's pretty much moving sideways, not a very clear direction. And with a high margin, and with a always like a sort of a ominous intervention or whatever, or potential intervention. I'm not sure I would recommend trading any Swiss pairs, but if you find good opportunities on the short term. You can definitely take them. But dollar Swiss by itself is not, its trend is not very clear, a little bit more bearish than bullish. But as you can see, with some very choppy trend, not a clean trend, one day up, one day down. So again, I don't have much to say at the moment about dollar Swiss. As you can see, it's moving in quite a tight range. Dollar CAD is, well, it found some support or around this demand zone with two reversal candle and candles and a confirmation candle, but still is stuck below these moving averages. I think if you're looking for a hint about where the dollar CAD could move, you better also have a look at the crude oil. Crude oil is, well, I'll go back to the chart of crude oil a little bit later, but overall the crude oil momentum is to the upside. It had some reversal candles on the weekly chart, so if crude oil starts breaking or going lower, we could expect dollar CAD to start moving higher. It's stuck in between these moving averages. In order to see some upward momentum, I mean, I would want, to the upside to see dollar CAD breaking above the moving averages, crossing. So the short crosses above the long-term moving average, and then the price coming back and retesting moving averages before continuing to the upside. That's in case it's going to the upside. Of course, if it's going to the downside, if it's breaking this demand zone, then we could expect dollar CAD to go all the way back to this previous demand zone, which is a very strong demand zone. Let's also look at it on the weekly chart. As you can see here, a strong demand zone forming here around 2015, being retested once, retested again a few months ago. And if dollar CAD goes back to this zone, well, we'll have to wait and see. Either it's a double bottom or it breaks below, which means Canadian dollar gains much more strength against the US dollar. And in such case, we'll probably see crude oil shooting much higher. If dollar CAD breaks below this demand zone, I don't know, maybe crude oil will see crude oil above $100 a barrel. The WTI. Jude, I'll go back to TradingView a little bit later, and I'll show you where to find the heat map. Okay, so I'll go back to it in a little bit later on this session, and I'll show you where to find it. But you can always write on Google heat map TradingView, and it will probably take you to the directly to the link. All right, and again, I'll go back to crude oil a little bit later. Aussie dollar. Aussie dollar, you see here, it broke below this previous low and retested it. The trend is not super clear. It's kind of moving a little bit up, a little bit down, lower lows, lower highs, but now in the last few weeks, higher lows and higher highs. I can't, well, technically maybe it's starting a new uptrend after coming back from this demand zone, but on the monthly chart, still it's below this strong supply zone. It did give us a reversal pattern here with this sort of doji and sort of like a reverse hammer and this engulfing bullish candle. So now it could find some support on these moving averages and start moving higher. Interesting to see where it's headed. On the short term, again, the trend is not super clear. Let's see how it reacts around this zone, around this well, sort of now a supply zone. Also here we can expect some supplier resistance, but basically if it gives us this, if it completes this reversal pattern, we could expect some more upward movement alongside with a Kiwi dollar, which is showing even more strength. So the New Zealand dollar against the US dollar is starting to gain momentum again. It's moving sideways, but as I showed you on the heat map, it's the strongest currency. The Kiwi is the strongest currency at the moment. And even though it went down from this supply zone, it didn't move down considerably. It formed this engulfing bullish candle last month, sitting on these moving averages, and now it's starting to push higher. So for now, especially if these moving averages on the weekly chart will start, if they start opening up and pushing the price higher, I would definitely start looking for more long positions on the New Zealand dollar. And you see here, sort of maybe not a pretty one, but sort of a flag pattern with this strong move to the upside, a sideways downward movement, and this pin bar with a strong confirmation candle. So again, I would start maybe looking for a long position, and of course, if it breaks above these highs, we can expect the Kiwi dollar to continue moving higher. If you're looking for entries on, I don't know, H1 or lower time frames, look for places where you have some support. Okay, don't just enter in the middle of nowhere, and of course, don't enter around previous resistance areas or supply areas. Okay, wait for some retracement and either enter around, moving averages, or enter around previous demand zones. Okay, for example, here there's demand, the price goes up, comes back, touches the demand, and starts moving higher. You can enter after a confirmation candle or a small position at the retest, or after the price crosses above the retest candle. So always look for places to enter around support areas, either dynamic support like the moving averages, or static support areas or demand areas like these ones. Okay, with some confirmation candle or reversal candle of some sort, it will increase your chances of, well, entering with more confidence and with better risk reward ratio on your trend, on your trade. So that's for Kiwi dollar. Again, overall, I think as long as it, continues pushing higher and completes this reversal pattern and crosses above previous highs, I think Kiwi, and we saw it on the heat map, is definitely showing some good opportunities to the long side against other currencies. Euro pound not giving much at the moment, still moving kind of sideways. Could be maybe accumulation, I'm not sure. It still hasn't tested or touched this demand zone on the weekly chart, the low one, the lowest demand zone. But if it continues moving sideways to the downside, sort of like compressing into the zone and eventually touches the zone, this demand zone, and giving us some price action on the weekly or on the monthly chart, then we could expect a nice movement to the upside. Otherwise, of course, if it breaks below this demand zone, we could expect more downward movement on this pair. But time will tell. So at the moment, not much to say. Trend at the moment is not very clear. A little bit more bearish, but not super interesting for now. Euro yen touched this supply zone on the weekly chart a few weeks ago and continued moving lower with this shooting star. So very nice price action on euro yen. Generally, lots of yen pairs moved lower in the last few weeks. But what's interesting, or it will be interesting to see how this pair reacts when it touches or reaches this support line, which or potentially support line, which was previously resistance, sort of like the neckline or whatever of this double or triple bottom. So again, like I said, dollar yen for now could be moving lower, pushing other yen pairs to the downside. And if euro dollar also breaks to the downside, then we'll definitely see some more downward movement on euro yen. But let's first see how it reacts with this moving average or with this support line. But the overall momentum is to the downside. It gave some nice short opportunities last week, at the end of last week, when it broke below this support line and retested it, gave some nice rejection candles. But for now, it's not moving very strongly to the downside, still hovering above this moving average and above this support line. So keep an eye on euro yen and wait for an opportunity either to the downside if it breaks below this line. And you can see this entire zone, by the way, sort of like this zone around here. So again, some more hesitation here, but the momentum is still more bearish than bullish, especially, as I said, since dollar yen is now breaking this support line and potentially going to provide us with some short opportunities in the short term. So that was euro yen. Swiss yen, as you can see, is much stronger just because the Swiss franc is stronger, but also a very nice reversal pattern here. So we have this sort of a shooting star and a confirmation candle. First target around here, previous highs and this moving average. So first target around 110, 120 pips on the weekly chart. Obviously on the daily chart, watch out for this area, okay, which is like an intermittent support or demand, and you have this moving average. But if it breaks below this area, it could fall or drop down like 100 pips more. Interesting to see how it will react here. Maybe we'll get a head and shoulders pattern. Maybe it will continue to the upside. More likely, well, again, I have no idea actually, so I wouldn't say what's more likely, but either it continues to the upside or creates sort of a head and shoulders pattern, or continues directly down, breaking. If it breaks and gives you a retest on the short time frame, let's say, let's take the hourly chart. If it breaks below, again, just if it goes, well, let's see. Okay, let's say it breaks below, closes below, and then retests on the short time frames. As long as it retests and closes below and starts moving to the downside, it could give you a nice opportunity to go short on shorter time frames like H1, maybe H4, but wait for it to close below, like at least a couple of candles below, and then maybe a retest, some sort of a reversal candle like a doji, a spinning top, or an engulfing bearish, and then it will be your sign to go in. But as I said, it could also move from this demand zone back up and maybe maybe continue higher or form a right shoulder before breaking down again. But you can see here on the daily chart this very nice bearish divergence on stochastic. So that also reinforces the downward momentum or the downward potential on this pair. Pound yen, same very strong candles with the shooting star and this strong look how strong what a strong move pound yen gave last week after the shooting star. Beautiful pattern, a beautiful opportunity for those who noticed it. And we have some, well, it could find some support around here. We have potentially also some support around previous highs here or here, but again, the if I'm looking at the long term chart, the monthly chart at the moment is still bullish. We can see an upward movement, a cross, and I mention it, you know, almost on every session, that I like this pattern where the price crosses above the moving averages, then the moving averages cross, the short one crosses above the long one, and then the price retests the short moving average and starts moving higher. That's a nice pattern. However, as you can see, it didn't close above previous low, above previous highs. Even last month didn't close above it, and now it's starting to move lower. So in the near term, I can't say where the momentum is currently. At least on the daily or the 4-hour chart, the momentum is definitely bearish. And keep an eye, well, maybe around this area, somewhere around here. Let's draw this zone somewhere around this area. Let's see if it holds. If you're trading the short time frames, well, wait for a clear direction, because at the moment it's moving sideways. I see traders, kind of getting eaten away by this sideways movement. So just be careful and wait for either breakout to the upside above these moving averages or to the downside. But it's interesting to see whether the pound yen will eventually manage to continue its trend to the upside, because the moving average is starting to push higher. Let's see how this week evolves and how it ends. At the moment, it's a little bit more bearish than bullish in light of last week's candle. And last thing, if it hits this zone, this area of previous lows and this moving average, maybe that could be a good entry or a good spot to start looking for long positions if it gives us a confirmation or reversal pattern of some sort. So that's for pound yen. Aussie yen also, as you can see, made a nice reversal pattern with these doji candles and a strong upward or a strong confirmation candle. Again, it started moving lower again this week. So I would recommend, at least at the moment, to wait and see. At least if you're swing traders, to wait and see how it reacts around this zone. This moving average, previous support areas, and of course, if you're trading, like scalpers or intraday positions, then at the moment looks like the momentum is a little bit more bearish. So breaking below this previous zone or below the support line could give you short opportunities, just like we mentioned on euro yen and other pairs. Again, just because dollar yen closed below the support line, it could push at least some of the yen pairs to the downside as well. So we see this this pattern on multiple multiple charts. Weekly breakout, but then a return, so sort of a false breakout on the weekly yen pairs. CAD yen as well could be moving lower to this moving average, to this area. On the daily chart, we can see here previous highs and this 50 EMA on the daily chart. You can see that it broke below this previous low or this previous support line. And even if I take it lower to this area, okay, resistance, support, 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 and now breaking below, then on the hourly or the 4-hour chart, it's giving a nice movement to the downside. So either if you want to join this this trend, you can either wait for some pullback and a retest of previous support line, which could now serve as resistance, or if you don't if you're not sure whether it's going to retest, if you don't have patience, look for some retest of on the lower time frames, sort of like, for example, returning back to the moving averages, forming some reversal pattern and continuing down. For example, here the setting of the moving averages is they're all exponential, 9, 21, and 50. But you can do it also 10, 20, and 50 or something like that. Okay, when I say a return and a retest of the moving averages, I mean something like that. Okay, it could be on either one of the moving averages, but it's like going back sort of sideways a little bit up and then compressing into the moving average with a reversal candle. You know, something like that, for example, to the upside, okay, pin bars on one of the moving averages, also to the upside. So when the trend is very clear, when the moving averages are open very clearly in one direction, entering around the moving averages with some reversal candle or a continuation candle could give you a nice entry signal. Okay, just wait patiently. Don't enter in the middle of nowhere. Just wait to enter more closely or adjacent to the moving averages when you also have some sort of a reversal candle which can hint continuation of the trend. So the same here, entering right here is entering in the middle of nowhere. It could turn around against you. Wait for some resistance like this moving average to enter. If you don't want to wait for a retest of previous lows level, or the breakout of the support line. Euro Swiss, I spoke a lot about Euro Swiss in the last few weeks. It's now inside the demand zone, this strong demand zone, potentially forming a bullish engulfing candle. We'll have to wait and see how this week ends, because in previous weeks, it also started moving higher and eventually closed the week lower. But the lower it goes, if Euro Swiss continues moving lower, it will increase the chance of Swiss National Bank intervention. I think, though, that this is a pretty good area for the buyers to go long. As you can see here, it's right inside this demand zone. It's right inside this demand zone, and you can see here this very strong candle, this double bottom. and looks like it's been kind of, starting to show signs of buyers coming in the last few days. And if it starts coming out of this demand zone, and especially if this week closes with a bullish engulfing candle, we could see further movement to the upside, maybe retesting this trend line, and maybe even breaking above, who knows. But as you can see on the monthly chart, the momentum is at the moment still very bearish. Look at this beautiful shooting star candle and the candle following it. That's why I say, I mean, the market is always giving you beautiful signals. You just have to wait for the signals. You don't have to rush in. Wait patiently. Again, this is a downtrend, retest of the moving averages, confirmation candle here, for example, and a strong movement to the downside. I'm not recommending anything on Euro Swiss, obviously, especially because the margin is high. The spread is a little bit higher on Swiss pairs, but the at least if Euro Swiss starts moving higher, it will take off some pressure. It will take some pressure off the shoulders of the Swiss National Bank. Anyways, that's it for now. You know what? Let's just have a quick look at the Swiss Kiwi to see what it's doing, since we saw that Swiss is sorry, Swiss Kiwi, where is it? Is it Kiwi Swiss? Sorry. Yeah. Okay. So yeah, Kiwi Swiss is definitely giving a nice movement to the upside. This reversal, nice reversal pattern. As I said, the Kiwi dollar, the New Zealand dollar is at the moment showing a lot of strength. The Swiss franc is showing weakness. So Kiwi Swiss is has been moving a lot today, and it could continue moving a little bit further up from this area. But just for technical analysis purposes, I don't recommend trading any Swiss pairs at the moment. It will just take too much of your margin. All right, let's go back quickly to the trading view chart to have a look at the crude oil chart, the heat map again. So crude oil, has been moving beautifully. Well, it broke above this trend line. As you can see on the monthly chart, it broke above this trend line beautifully a few months ago and pushed higher. And it can continue moving higher towards, let's see, towards this supply zone around here, which is around somewhere in between 102 and 108. The momentum is still up. You can see how it broke, even closed above previous highs or previous resistance, and it's the moving averages are bullish. The price is sitting above the short-term moving average, and it broke above previous high here on the weekly chart. Maybe it will retest it. If it retests it and gives us some price action here, it could be a nice signal to the upside. And then again, if crude oil continues higher, then we could see dollar CAD moving lower. Okay, so that's for crude oil. Again, the heat map can be found around Forex market. If you go to markets, Forex, here currencies, and you go to heat map here. I hope you can see it. So that's where the heat map is found. You can also look at currency indices, and TradingView is giving also lots of other tools as well under more. So for now, Kiwi dollar still strong, Swiss franc still weak. It's nice, you know, looking at this heat map and looking for opportunities. You know, seeing where, you know, where the strongest currencies are, the weakest ones are, and waiting or looking for opportunities around these currencies. Yeah, so that's it for today. A question from Enrique about the margin for each different pair. Basically, the margin is calculated according to the leverage, but also there is, you know, in the admin also a margin requirement per currency pair. Basically, the margin is set by taking the position size of or the value of the position in the relevant currency, and then dividing it by the margin. So, sorry, by the leverage. So, and you know, I can give you the exact calculation, but the Swiss margin is currently, I think, pretty much 1 to, I think 1 to 1. I'm not sure. There at the moment there's no there's no leverage for Swiss, so it's like taking full margin for Swiss pairs. Okay, currently, hopefully, if Swiss continues, you know, losing momentum, we'll be able to reduce the margin requirements, because our liquidity providers are they're taking more margin from us, and that's why we have to take more margin from our traders, just because each position you guys open on Swiss pairs requires more more margin or more securities from our end with our liquidity providers. That's why we have to increase the margin. So at the moment, the margin is, I think, like 6 times higher for Swiss franc than other currencies. Well, that's it for today, basically. If you have any questions, if you'd like to ask anything else before we close the session, please write it down in the chat box. Thank you, David. Thank you all for attending this week's trading, or today's trading room. Please reduce your risk, manage your risk properly, wait patiently for the best setups. Don't chase the market. Don't, you know, don't try to go for home runs or become a millionaire just from one trading room or trading account or one trade. Take it slowly. Set as a goal to become consistently profitable, and the profits will come in time. So just be patient, be disciplined, and especially be mindful to your thoughts, to your emotions as you trade. And that's it. Have a successful trading week. Thanks again for joining me today, and best of luck to all of you. Thank you. Take care. Thank you. Thank you, Conrad. Thank you, Nikolaos. Thanks, Heath. Thanks, Urson. Thank you. Thank you very much, all of you. Take care. Bye-bye.